This video is going to be simple and short. If you're watching this video, I believe you know Jefrrey Benson. And now in this video, I'm going to see if Jefrrey Benson's strategy is worth buying. I'm making this video for you so you don't have to pay for his course. At the end of this video, I want to see if Jefrrey Benson's secret forex trading strategy is worth it and if I can make money from his strategy. Let's go, guys. Alright guys, so welcome. And in this video, it's very clear. I'm going to be teaching you the Jefrrey Benson forex strategy. This is the strategy that my guy used to bag his new Lamborghini, his new McLaren, and a whole lot of his other vehicles. And I believe someday that guy is actually going to get a Rolls Royce. Okay, so enough of the long story, let's jump straight into it. Now, what strategy does Jefrrey Benson use to trade the forex market? Now, it is very simple. There are a whole lot of things in which, a whole lot of times people come up with different names for different forex strategy, but Jefrrey Benson just uses simple price action, which has a whole lot of subsidiaries under the price action. First things first, we're going to be speaking about 1, market structure, 2, top-down analysis, 3, psychological levels, and 4, trend lines. So these are like the 4 keys in which Jefrrey Benson uses to trade the forex market itself. We're going to come into our screen and let me explain all this in which I mean. Now, this is a naked chart, as we all know. And first things first, let me just make this clear. If you're a beginner in the forex industry, you do not need to be having all those charts that has different lines, different candlesticks, different indicators, and a whole lot of these other things, because you're not really going to understand the market clearly. So I think a naked chart is always the best. So this is GBP card, and this is a naked chart. So as we can see, first things first, we're going to start with the market structure. Now, what does the market structure look like? On a daily time frame, what do we see on the market structure? Now, the market is, I want you to understand something. If you pull it downwards like this, the market is going to look like it is consolidating, but actually it's not consolidating. But then if you pull it out like this, you're really going to understand. So don't always have that sweet spot where you're going to pull the market. You're not going to overstretch the market. So what does it look like is happening? Now, the market is on an uptrend. So this is a high, this is a low, this is a higher high, this is a higher low, this is a higher high, this is a higher low, this is a little higher high. I would have said it's an equal high, but it went a little bit above. And then this is a higher low. Now this is a higher high, higher low. And then this is an equal high, because you can see it's the same with this one. And after it made an equal high, then what happened? It went straight to the downside. So it was about to make a shift of structure. Now, shift of structure happens when the market, or when the next low is lower than the previous low. So this low is lower than this low. It has had a low. 2 things happen in shift of structure: a low and a lower high. So when the next one does not break above, for example, if it had done this, it did not break above this, it has had a shift of structure automatically. So a shift of structure happens when the next low breaks above the previous low. A lower low, then a lower high happens, then that is a shift of structure. But unfortunately, this was not a shift of structure. So we would have said instead, let us continue from here. We're going to put this from here. An equal high, then a lower high, right? A lower high. And then it came up a little bit, it came back again here. So here was basically consolidating before it broke above to this point, and it has come back here again to this exact same zone to push it to the upside, right? So I think for now, the market structure and the direction of the market is clear. The market is on an uptrend. GBP card is on an uptrend. So if we're looking for something for GBP card, we're going to be looking for buys, obviously. And then the next thing I would want to teach you is, just in case you're confused, let us mark out the highs and the lows in this GBP card market. Remember, we're looking for buys, so we should focus more on lows. Because listen, in the forex market, you want to buy low and sell high. Jefrrey Benson also believes in that. So let me write this: buy low and sell high. So this is something you're meant to be aware of in the forex market. You're always meant to buy low and sell high. So it is right here. We need to remember that, okay? Yes, buy low and sell high. So we have to remember that. So it means we're going to be buying, right? Because remember, buy low, sell high. So if we're buying, where are we buying? Low. So let us mark out the opportunities where we should have bought in this GBP card market. So let us mark out the lows. This is a low, right? So this is a low. So these are the points in which we're going to be marking out. Let me change it to blue. Let me change it to blue. So this is a low. Where is another low in which we should be buying from? This is another low. You can mark it out with me even before I mark them out. Then this is obviously another low, right? This low touches this low and touches this low, right? And okay, it does not touch it exactly, but it touches it a little bit. If we are to change this to a candle, or if we're to change this to a line chart, we see it does not touch it exactly, but it touches it a little bit. So let's go back to candles. Now, where is another low that we can mark out? Now this is another low, right? So that's another buying opportunity. Now remember, the lows, the blues are the buying opportunities. These are the buying opportunities. Now, if we're to sell this market, where are we going to be going for sales? We're going to be going for sales where? For highs. Remember, buy low and sell high. Let me change it to red. Now, I'm not going to be marking out the highs because this is not a selling market. It's not a selling market. But this is a high. This is another high. Let me just mark it out so you're going to understand. This is another, like I said, I'm not meant to be marking it out, but let me mark it out. And then this is another high, okay? So these are highs and these are lows in the market, right? So it means we should have bought here, buy, then sell at this point, sell to go to the downside, sell at this point to go to the downside. So remember, we're looking for buys. So maybe if we had bought from this range, if we had bought from this range, because this, so we kept it underneath, and now where's the next selling point? This is the next selling point, right? Imagine we bought here. So this would have been a 1:5 risk to reward, in which is a very sweet risk to reward that even you can utilize for yourself. So imagine we had bought here. So then this is what I want you to understand: buy low, sell high. So if you mark out the market like this, remember it's on an uptrend. If you clearly mark out the markets like this, you obviously know that the market is on an uptrend. Now, I'm not really a fan of the trend lines, in which I'm going to come to trend lines later. But if you mark out the markets like this, the reason I'm not really a fan of trend lines is because of this. We don't know where to put this trend line. Maybe we could decide to put this trend line here. If we put this trend line here, fine and good. We can also decide to put this trend line again here also. So how many trend lines do you have? You have a trend line here, you have a trend line here. I'm not really a fan of these kinds of trend lines because sometimes, one, they make your work kind of messy. Two, they don't work all the time. But then again, I'm still going to teach you so you can decide to choose or not. So we know that the market is on an uptrend, right? So we can kindly delete this. So the lows are opportunities. You can also we could have also taken another buy from here. I think this GBP card is really a sweet market. I'm kind of liking it. We could have taken another buy from here, in which if we did, it would have looked something like this. another buy to this exact same point. But this one will be a shorter trade. This is most likely going to be a scalp or a day trade because this is a daily time frame. So these are examples of how the market works, right? Very good. So now we've understood the market structure. That's one. We've understood buy low and sell high. That's one. And then two, we've understood the overall direction of the market in which it is bullish. Okay, it is going to the upside. So the daily is bullish. Let me write that down. So the daily is bullish. So the daily is bullish, right? We already know that the daily is bullish. Now, if the daily is bullish, how about other pairs or other time frames rather? We're not going to be needing this, so we're going to delete it. And also all these red lines, we're not going to be needing it. But before that, let me tell you something about the blues and the red lines. The reason I decided to mark them is another thing that could help you is check where the red lines and the blue lines meet. That is your key level. Or you can also call it, okay, let's just call it key level. So I'm not going to confuse you. That is your key level. Now, for example, we can see this is a red line. It does not meet perfectly. It doesn't meet perfectly. Yes, I know it doesn't meet perfectly. But we can mark this out as a key level, right? I can decide to mark this out as a key level. If we change it to line, line gives you a better vision of how it is. So I can decide to mark this out as a key level, in which it's not the most perfect one, but I think it does the job a little bit. This is one key level. Another key level is here. We can see there's 1 touch, 2 touches, 3, 4, and 5, right? So this is a high, the red line. This is a low, the blue line. So this could be marked out as another key level, in fact. So we've understood this key level, we've understood this key level also. So if we now want to change it back to a line chart or a line graph, like I said, we've understood market structure, we've understood the overall direction of the market, we've understood buying points and selling points, buy high or buy low, rather sell high. Now we are going to be working our way down to a 4 hours time frame. Now from a 4 hours time frame, you can see this. This is actually a shift of structure happening in the 4 hours time frame. Now let me show you what I mean. Now remember the market was on an uptrend, right? In the daily time frame. Now we can see from here high, a little retest, and then high, and then it came back here. So this is not a higher high. This high was not able to break above this high. You understand that? The high was not able, if he had broken above, we would have called it a higher high. But unfortunately, it did not break above. But instead, it stopped below and then came back here to make a shift of structure. Now, how does shift of structure happens? Shift of structure basically happens when a lower low and a lower high has taken place in a bullish market, or a higher high and a higher low has taken place in a bearish market. I'm going to explain what I mean. Now, let us say this is a bullish market. The market is making high, lows, and some consolidations also. Let's add this so it's going to be realistic. And then there's a high, and then there's a low. Now this is where a shift of structure would happen. It creates a new higher high, and then a higher low, and most likely the higher low dips. And then when the higher low dips like this, instead of it to create a new higher high, it would instead create a lower high. And then from creating a lower high, it creates a lower low. This is automatically a shift of structure. Now, if I were to enter this trade on a shift of structure, I would enter the trade right here when it comes again to this zone to create another lower high and then a lower low. So we can see that it's going to go like this. So this is where I'm going to enter the trade. So this is a shift of structure. And then when I enter the trade at this point, I'll just take it to the downside. Now this is a shift of structure from a bullish market to a bearish market. Now let me show you the opposite direction. A shift of structure from a bearish market to a bullish market. Now it is making lower lows and lower highs, lower lows and lower highs, and some consolidations. Let's add the consolidation. And then again it breaks, and then it comes here again. And then it makes another lower low. Now instead of making a lower high, it dips very well. Yes, this is actually a lower high, but instead of making a lower low, then it now makes a higher low. Do you understand? It makes a higher low, and then it makes a higher high, and then it comes back to this zone to retest, and then a shift of structure has automatically happened. Now if I'm to enter this trade, I'm going to enter this trade here at this zone where it comes to retest. Actually, the shift of structure did not happen here. The shift of structure happened here, because listen, this is a high, this is a low, this is a lower high, this is a lower low, this is a lower high. This is meant to be a lower low. If this had continued like this, it would have been a lower low, but it stopped here, so it is not a lower low. So this is like a disrespecting the trend. So you could call this a higher low, because this is now a high and this is a low. So this was where the shift of structure happened, but you're not going to enter exactly where the shift of structure happened because you don't know. So you're going to be entering after the shift of structure has taken place, the first retest after the shift of structure, which is most likely going to be at this zone. So this is where you're going to be entering the long position. Now you can see the similarity between the two of them. So this is where you're going to be entering the long position. So you're going to be taking it to the upside. So you can see this is a shift of structure from a bearish market, down to a bullish market. And this is a shift of structure from a bullish market down to a bearish market. And I believe you understand. So let's us go back to the example. So if we take a look at this right now, this is a shift of structure from what to what? Think. Just in case you don't understand, this is a shift of structure from a bullish market to a bearish market. Because we can see, listen, the market has been making higher highs from the daily time frame, okay? I could use this as, sorry. I could use this as an example. This is a high, this is a higher low, this is a higher high, right? And take a look at this. This is the higher low. This is the higher low. But now this higher low came again here, but it did not break above this. It did not. So as it did not break above this, what happened? It has come back here to retest. And you see it has started making lower lows. And most likely it's still going to push to the downside. But now this is a two-way kind of shift of structure, because now take a look at this again. This is a high, higher low, higher high, and some people could argue that this is the higher low, and then it's still going to keep on going to the upside. But let us see anyways. Let us see how it's going to be. Now the 4 hours, like I said, is the 4 hours on a bearish or on a bullish move? The 4 hours is on a bearish move. Yes, to be honest, the 4 hours is on a bearish move. So remember, the daily was on a bullish move. The 4 hours is on a bearish move. Let me write that down. Four hours bearish. So the daily is bullish, the 4 hours is bearish. So what are we going to respect right now? So it's a 50-50 something, that the daily is bullish and the 4 hours is bearish, because we can see even from this daily candlestick, we can see this is a clear shift of structure. I mean, you yourself, you know, it is clear. This is a clear shift of structure. So in this case where the market is having shift of structure, maybe the market just wants to push to this down. Maybe the market just wants to push all the way down here and then take it to the upside. So in this case, what will happen? Now, let us look at the market this way. Where is the most recent high? Obviously, this is the most recent high. This is the most recent high. And then where is the most recent low? This right here is the most recent low, right? So this is the most recent low and this is the most recent high. So the market is in between. So this is where we should be focused on right now. This is where our focus should be, right? Because this is the most recent low and this is the most recent high. So we can see this is a touch, this is a touch, this is a touch. This could actually be used as an area of interest or as a key level. It is another key level. But just to fix it perfectly, let's go back to the line graph. Okay, I think it's good. I think it's good. So we can go back to the candlestick. The daily is bullish, the 4 hours is bearish. So if we go back down to the 4 hours, what again can we see in the 4 hours? So I just went back to the weekly because actually I forgot to check the weekly. If we look at the weekly is clearly bullish also. Let me delete. The weekly is bullish. So if the weekly is bullish, the daily is, I'm going to write that down. If the weekly is bullish, the daily is bullish, and the 4 hours is bearish, we have to stick to the fact that more time frames are bullish than bearish, because who knows, this could just be a retest to also take it to the upside. Do you understand? So I think we're going to go back here and we're going to write weekly bullish, weekly bullish. So the weekly is bullish, the weekly is bullish, the daily is bullish, and also the 4 hours is bearish. So it means we're actually looking for buys and not sells. Now, yes, the 4 hours is bearish, but we're not going to mind this 4 hours bearish move because the market is actually going to the upside. So remember, what we're going to be looking for now is we're going to be looking for entry points. Now remember, we're buying low, right? It's low, we always buy. So we're going to look for a low point in the market where we're going to buy. So maybe, who knows, the market just wants to come back to this bottom to create a double bottom. Now remember, this is Trump's regime. So Trump's regime, we could be having some shake or some shifts in the market. So this is a key level. So maybe we want this market to come back to this key level, then we can take it to the upside. That is option number one. Or if we go lower to the 1 hour, what can we see in the 1 hour? Now, for someone my level, I could actually take this trade. I could actually take a counter trend trade, but I'm not going to suggest that to any one of you. Counter trend trade like this, if the market breaks beneath here. Now remember, we are on an uptrend though. But we can take a counter trend, a counter trend trade to the downside, maybe something like this, in which most likely, I mean, if I see this setup make very well, because if we take a look at this, this is a nice market structure. The market had a shift of structure here, not just a shift. This is not just any shift of structure. This is this is a head and shoulder in which Jefrrey Benson trades head and shoulder. So you can see this is the shoulder. It's not really that clear. That's the head. This is another shoulder, and then it breaks below and it just keeps on going. But I would have waited for the market to break below, come back to retest, and then we take it to the downside, in which it never came back to retest. It never came back to retest, but it just broke below and kept on going. So I would not really suggest anyone to take this, especially when they are beginners. So I'm going to say GBP card is something we should wait for, because we're looking for buys, not sells. Remember, not sells in GBP card. But we can also take a counter trend trade in a GBP card. Maybe take the short position to the downside. Now, like I said, let me make it clear. This is a counter trend trade. I mean, it is against the trend. So we're meant to be looking for buying opportunities and not selling opportunities. So instead, the market, this line I marked out here was not really that respectful. It hasn't really respected it so much. It just started respecting it lately. But this is more respectful. So it seems like the market could pull all the way down here, and we can then take the proper trade, the proper long position trade, all the way to the upside. I think this is a very proper one, and we can keep our stop loss maybe somewhere here. This is like a 1:3 risk to reward. I think this is the proper trade we should be expecting in GBP card, but this is a 4 hours trade. This is 4 hours time frame trade. So I think this should be what we should be expecting in GBP card. GBP card, we're going to be expecting buys. And remember also, I talked about psychological levels. Now, how psychological levels work is, I know I drew a whole lot of things, so we may not really be able to see the psychological levels clearly, but we can see anywhere that ends with 00 is a psychological level. 000, 000, and so on and so forth. These are psychological levels. So if you look at, most times the markets respect psychological level because, okay, here that we want to take the trade, where is the closest psychological level? Let us see. There should be a psychological level around here, which I'm not really able to find, but this one could help us understand the trend of the market. So for GBP card, we're expecting buys. So with what we have learned from GBP card, let us go to AUD card, right? Let us see how we can analyze AUD card and its movement. So first things first, understanding market structure. Is AUD card on a bearish move or on a bullish move? AUD card quickly is on a bearish move because it's making lower lows and lower highs, right? We can see the lows are very clear. So we know that it is on a bearish move. It's clear it's on a bearish move. This would have been a shift of structure, but it did not retest. So this is more like a consolidation. But then again, that's broken below and it has come back here to retest. So it is on a bearish move, although this zone has been a zone of consolidation for a while now. This zone has been a zone of consolidation for a while. But even though this is a zone of consolidation, it's still not going to stop us. It's on a bearish move on the weekly. On the daily, it is also on a bearish move on the daily. It's also on a bearish. We can see this is a break and retest to the downside. And this is a very clean setup. Now, on the 4 hours, let's see. Now, on the 4 hours, it is on a bullish move. You see, most times, the daily and the weekly will be in sync, but the 4 hours is always opposite. It's a very stubborn time frame. But then again, the 4 hours, it still says that something is cooking. So if we're going to find out places or key levels that we can mark out on the weekly time frame, so where are the key levels? Where are the places that the market has come to and reversed multiple times? This is 1, 2, 3, 4, and here it is currently. So it means this is respected, right? We can mark this, and I don't like marking it too much, so it's not going to have too much mark. But this is good, right? So where again? This is another 1, 2, 3, 4, 5, 6, 7, 8, 9. I mean, a lot. So we can mark this also. So this is another point in which we can mark. Now, another question is, where was the most recent high? Here. Where is the most recent low? Here. So this is the latest movement of the market, right? So before this high, where was the latest low, which is here, right? And we can see a week respected this point, but we don't really focus too much on weeks. So it's here. So I have a feeling that this market is going to go for a sell AUD card. Now we can just hold this point. So we can hold this point a little bit, but let's see. Then if we go to the daily, let's see how much this point has been respected. This one has been respected more. We can see 1, 2, 3. It has been respected more, but seems like it is respecting this point. So what I would expect is a break underneath here, a break underneath our key level, and a retest to go to the downside. Or maybe, who knows, the market could want to do a double top, because a whole lot of times the market does it. But this is what I'll be expecting. I'm expecting sells from AUD card. That we're going to keep this here and just keep this a little bit above here, and then we're going to take this all the way down. So this is a 1:3 risk to reward. From AUD card, we're expecting sells. From GBP card, we're expecting buys. So we can see that the market structure is different for both of them. So I'm going to see if I'm going to be updating you guys or not. But first things first, we're going to stop here. I hope you've learned the Jefrrey Benson strategy. Very simple. We buy low, we sell high. That is one. You understand the market structure if it's going on an uptrend or a downtrend. That is another one. Then you mark out key levels, and then you look for entry points in psychological levels and also some other market structure in which we can find out. Okay, have a lovely day. Bye for now. All right, guys. So testing the Jefrrey Benson strategy. There are a whole lot of things that have happened in the market. Let me keep you updated, and just to prove to you that Jefrrey Benson strategy actually does work. Now, just to make it clear, I'm not an advocate for a strategy. I'm not an ambassador. I'm only doing this to get views for myself. Okay, so let's go. So this is a trade I entered. Turn off the lights here so you can see it clearly. So was a trade I entered. This is USD JPY, and actually I got stopped out. Now if you look at this, the market was on a downtrend. It broke below. I was waiting for a break and retest, in which I got, but then again it still came back to this place. It still came back to this entry point and wicked me out before pushing down to the downside, or pushing down towards my direction. And I think the market has started going towards my direction, in which I could be re-entering the trade, but I'm not sure. That's for USD JPY. But then the trade I entered is the USD card pair. Now for the USD card, if we take a look at it, for the USD card pair, we can say that the trade is going towards our direction, or although it has not completely hit our take profit, we still have a long way to go, in which it may take time, but I believe at some point it's going to hit. And when it hits, I wish I can update you. If I can, I'm going to update you. If I cannot, I'm not going to update you. But we're going to see how it's going to be. And the market is so volatile. I don't know what's happening. The Trump market is something else, so confusing that a whole lot of us may not really be able to understand. So, in summary, in terms of the Trump market, everyone should be careful and everyone should be very, very patient with the markets, because nothing has changed. The only thing is that the market is more volatile now than it used to be. Okay. So, ladies and gentlemen, thank you for watching this. Ladies and gentlemen, thank you for watching this very amazing video. Bye for now. Subscribe.